Welcome to Nerd Girl Bookkeeping. In this video, I will teach you how to create payroll contribution items and how to use them in payroll. Using this type of process for recording company contributions allows for better reporting and will make the employee W-2s come out correctly at the end of the year. I will cover before and after tax benefits, including 401k matching, HSA contributions, and optional insurance premiums. I will walk you through setting up payroll contribution items, adding additional liability and expense accounts, and modifying employee profiles to start tracking the contribution. Unlike payroll additions and deductions, which affect an employee's paycheck immediately, contributions are not paid to the employee directly and are not added to their gross pay on their paychecks. However, it will show under other items on the paycheck detail screen while processing payroll and will show under either taxable company items or non-taxable company items on their pay stubs. To get started with your contribution item, you will need the source document from the plan administrator or policy agent that breaks down the contributions for each employee. This report may include both pre-tax and post-tax contributions. At a minimum, it needs to include the participating employees, the contributions that you are making for them, any limits that apply, the plan's legal name, your account number to use when you're remitting accrued payments, and the frequency of your contributions. Be sure that this frequency matches your payroll frequency. If it doesn't, I'm going to include calculations in the description section for other payroll frequencies. First, you will need at least one payroll contribution item. It is highly recommended that you create an item for each benefit contribution because they can have different taxation rules and limits. If my screen looks different than yours, it's because I am using QuickBooks in multiple windows mode and make frequent use of the top menu bar. Now let's set up a pre-tax payroll contribution item. If you only need post-tax items, go to the post-tax item creation marker in this video. So to get started, we go up to Lists and down to Payroll Item List. And if you've used payroll before, you'll see quite a few items in here, but we're interested in going down to the bottom left-hand corner and selecting payroll item and going up to new. Please be sure to select custom setup so that we can adjust all the settings that we need to for this contribution item and click next. QuickBooks defaults to a deduction, but go ahead and click the button next to company contribution because that's what we're doing and click next. Now we get to name our item. Since mine is a company paid contribution to HSAs, I'm going to call it HSA Company and click Next. Here you will enter the name of the agency that administers your fund. In my example, it's ABC Plan Administration. Next, you want to enter the number or account number that you use when remitting your payments. On my example, it's ABC 123. Next is the liability account. QuickBooks defaults to payroll liabilities, and there's absolutely nothing wrong with using that account. But if you want more detail for your reports or your chart of accounts, you can add a new account right here. If you are going to use a default account, go on to the expense account. If not, click the drop down button and scroll to Add New. You're taken to the account creation box. Keep in mind that in most boxes in QuickBooks, like accounts, vendors, and customers, you can just start typing the new name and it will prompt you to confirm that you want to create a new one when you leave the box. For example, if I cancel out of here and instead delete this and start typing in the name of my new account, HSA Payable, and then tab or click out of the box and it will tell me that the account is not found and give me the option to set up and I end up right back where I was when I used the Add New button. If you want to make this a sub-account of payroll liabilities or any other liability you have, click the sub-account button and then select it from the list. I'm not going to make mine a sub-account, so I'm going to uncheck this. Fill in any of the other information that you need and click Save and Close. Now that we are back on the payroll item creation screen, it's time to select an expense account. The same principle applies here as does for the liability account. You can keep the default account, but in this situation, I strongly advise against it, or you can use or create a different one. For this example, I'm going to use an expense account I already set up for this. If you need to create a custom expense account, hop back to the custom liability account creation marker in this video. My account for tracking benefits that are an expense to the company is called Benefits Expense. And then click Next. Here's where the important differences in contributions come in. This is where you select your tax type. When you click the drop down arrow, you will see a long list of preset options for the taxation of this contribution. Select the correct item from the list for your contribution. If you're doing a pre tax company paid HSA, I'll select HSA company non taxable and click Next. Here is a summary of all the taxes in your payroll system and whether or not they are affected by this contribution. And click Next. Contribution is not based on quantity or hours, so I'm going to select neither. This isn't necessarily true for all contributions, so be sure neither is the best one for your item and click Next. Leave the default rate blank unless the amount is the same for all employees. If you put in a default rate and all employee contributions are not the same, you run the risk of forgetting to change it for the employees that have other amounts. You'll see what I am talking about later. For my example, all employees receive a $50 contribution to their HSA. If there is a limit, it will be on the report. If there isn't one, leave the limit blank. HSA contributions have an annual limit of $4,400 for single persons at the time of this video. It has an annual restart, but you also have the option for monthly or one-time restart. And click Finish. Be asked if you want to schedule a payment for this payroll item. I'm not covering that in this video, so click OK. And here you will see your pre-tax payroll item in the list of all the other payroll items. If you are done with creating items, skip to the Employee Center marker in this video. Now let's do a post-tax contribution. The process is essentially the same as for pre-tax contributions, except for the tax tracking section. Let's walk through it. Go down to the bottom left-hand corner and select Payroll Item, and up to New. Be sure to select Custom Setup so we have all the settings that we need, and click Next. The selection will default to a deduction, but we are doing a company contribution, so select that and click Next. My item is an optional insurance, so that is what I'm going to call it. And click Next. Enter the name of the agency that collects your payments. Mine is the same plan administrator, so it's plan administrator again. And so my account number is the same. And here we come to the liability account. Again, you do not have to create a custom liability account unless it is something you want to track on reports or see on your chart of accounts. If you're going to go with the default liability account, go to the expense account. If you want to create a custom liability account, go back to the marker for custom liability account creation. I'm going to go ahead and keep it with the default payroll liabilities. Now for the expense account, the principle is the same here. You can keep the default account, which I advise against, or use or create a different one. If you need to create a custom expense account, hop back to the custom liability account creation marker in this video. I have already created an account for tracking benefits that are an expense to the company called Benefits Expense, so I'm going to use that again and click Next. Now we are at the tax tracking option. For post-tax items, you simply leave it on None and click Next. Again, a summary of the taxes in your payroll system that could be affected by this contribution, and there are none. Click Next. This contribution is not based on quantity or hours, so I'm going to select neither. This isn't necessarily true for all contributions, so be sure neither is best for your item and click Next. Leave the default rate zeros or blank unless the amount is the same for all employees. If you put in a default rate and all employee contributions are not the same, you run the risk of forgetting to change it for the employees that have other amounts. See what I'm talking about later. For my example, each employee has a different rate, so I'm going to leave it blank. If there is a limit, it will be on the report. If there isn't one, leave the limit blank. If you do have a limit, make sure you check the correct restart, an annual restart, a monthly restart, or just a one-time limit. And click Finish. You will be prompted to schedule a payment for this payroll item. I'm not covering that in this video, so click OK. And there you see your second contribution, optional insurance. Now it's time to add the payroll items to the applicable employees. Go up to Employees, Employee Center, and in my example, the report shows that all three employees get all of these contributions. And this is a good time to mention the importance again of the frequency of the contributions. Most plan statements come to the employer as monthly premiums, but most employees are not paid monthly. If you use the monthly premium amount, but the employee is paid, let's say, semi monthly, the contribution would be doubled on their record in taxes, even though it was only paid once. So I'll start by double clicking employee number one and then payroll info, then over to the second box on the right, and I'll start typing HSA, and it comes up HSA company, and then the amount is 50 and the limit is 4,400, just like I set up as my defaults. And then the other one was optional insurances, which is different for every employee. So this is where not setting the default amount in the payroll item creation is very important, because if I had set a fixed amount for optional insurance, but all my employees are different, then I run the risk of putting the wrong amount with the wrong employee. And then it's just easier to not fill in the default rate in that situation. And I click OK. And employee number two, employee information. I don't have HSA company, same amount, same detail, optional insurance. His amount is 6302, no limit. Click OK. Double click number three, payroll info. Go to the item name, HSA company. It autofills. Optional insurance is 3714, no limit. OK. Now I'm going to take you into the paycheck detail in payroll to show you how this affects their pay stubs and their paychecks. Here is the preview paycheck screen inside payroll. You'll notice that these are listed down here as payroll items, but they do not affect gross pay. They are in the company summary section. And here on their pay stub, you will notice that both the HSA company and the optional insurance are listed under the non-taxable company items because they do not pay tax on either one of these. And that's all there is to it. If you want to see more videos like this, please like and subscribe below. If you have topics you would like me to cover, please leave in the comment section. Feel free to follow me on Instagram, and thank you for watching.